video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and what a week it's been. It's been quite boring, to be completely honest with you. I've been relaxing, waiting to see some cycle lows. We are continuing to stalk these things like a predator, looking to snipe that perfect entry. I think, as I'll show you at the charts in a minute, we're pretty close, but not quite there just yet, although I am on guard to see some lows forced. But as you'll see in a minute when we get to the charts, I think there's a little more work to do. So today we're going to talk about US debt. I'm going to show you some pretty interesting Bitcoin stuff, Ethereum. We're going to cover oil. And then, of course, we're going to hop into the charts and continue to hunt those cycle lows. And as always, if you want to continue to follow along as I hunt down these cycle lows and get some longs on in the next few trading sessions, be sure to hit that subscribe button and turn the notifications on so you don't miss any of those updates. Let's dig in. The US national debt just jumped 345 billion in the past 3 days, hitting a whopping 35.7 trillion, a new all-time high. To put this in context, this means that 4.2 trillion in debt has been added in just the past 18 months. 12 trillion of that has been added since Q1 of 2020 and 26 trillion since 2008. 75% of all US debt has been added in the past 16 years, and currently the debt is rising almost twice as fast as the economy. So I'm by no means suggesting this is going to collapse any day now or imminently. This is not a doom post. I'm just pointing at this and suggesting that this probably can't go on indefinitely. We've got a bunch of these Gulf states declaring neutrality. So I was saying earlier in the week that the cycle lows were due and that the market would always find a narrative. It would find some reason to justify the price action. And it seems as quickly as we found the narrative to blame the decline into the cycle lows on, we now are setting ourselves up to have the relief out of those cycle lows as the market and investors will continue to look for new narratives to explain away the upcoming upside in the risk assets. I've been seeing a bunch of speculation that perhaps the oil price was low and we needed to bounce out of here and that's why some of this stuff was going down. I don't subscribe to that personally. Once again, the cycles remain in control and remain to be the focus of this channel. For oil, we have found a daily cycle low. We look to be pushing up towards this resistance line, but this is the key thing. The weekly cycle and the 4-year cycle is still down in my humble opinion. I don't think this is the 4-year cycle low, nor do I think this is the weekly cycle, which tells me that we're probably going to get a touch of resistance, which would probably present a shorting opportunity before then we see that decline into those major daily, weekly, and 4-year cycle lows. Over in the world of Bitcoin, historically, Q4 tends to be extremely bullish for Bitcoin during halving years. You can see we did 97.7%, 58%, and 168% in the Q4s of the prior 3 halving years. And what's interesting about this is even if conservatively we just do 58%, that still puts us pretty close to 100k Bitcoin. If we were to do 100%, needless to say, that would put us somewhere in the 120k neighborhood. And so I maintain that it's not completely beyond expectations to see a large pump into the end of the year for Bitcoin. We had a whole heap of jobs data and unemployment data come out this week. I'm going to do most of this in the deep dive on Saturday as always. To be honest, it was kind of a mixed bag, but generally speaking, the unemployment does continue to deteriorate. In initial jobless claims, 1-year moving average just crossed above the 3-year moving average. Historically, this has been an indicator for seeing potential recessions come in. We're also seeing job cut announcements skyrocketing, and this is the second highest number of layoffs in 13 years. Over in the world of Bitcoin and crypto, okay, mysterious creator of Bitcoin has been identified according to a new HBO documentary. Anyway, bullish market structure is back. So for the first time in about 6 months, we have produced a higher low times 2 so far, okay, to be determined, but so far, and we've got a higher high so far. So if indeed my expectation continues to play out, I think we're going to get something like this. Half cycle low, and then off we go. And as long as we can print a new higher high and confirm a new higher low, then we will, for the first time in 6 months, have a true change in market structure, a true change in behavior, and thus it would be malpractice to be bearish here. But the news isn't quite so good for Ethereum. Ethereum is currently threatening a major bull market invalidation with a breakdown of this upward sloping support line. If it is to break down from here, and I'm not saying that it will, I'm just saying if it is to break down from here, this will be major bull market invalidation. This will be a true technical breakdown. This will be hugely damaged and will likely take a long time to repair. So if you're bullish Ethereum here, you really need to see this thing hold. And I would suggest that if you're heavily in altcoins, you probably need to see this thing hold as well, but I'm not an altcoin specialist, so don't quote me on that part. And another look here for ETH BTC, okay, it continues to underperform, and with this current breakdown, it can certainly start to accelerate from here. This for sure is not a good look. It doesn't mean it couldn't reverse and this couldn't turn out to be a fake out. But on a balance of probabilities, it is malpractice to be bullish here on Ethereum versus Bitcoin, at least until this thing can turn around and make some repairs. And one of my favorite charts here from Andrew, a periodic reminder that the 17-year top-to-top cycle suggests a major top for the S&P 500 is coming this year. Now, that means, given how close we are to the end of this year, that there might only be a couple of months of upside left. These are 12-month candles, and like clockwork, every 17 years, we have seen a top come in, followed by about a year, if not more, of downside thereafter. So if this thing is going to repeat, it should tell us to keep an open mind about seeing the next year be a red 12-month candle. And so with all of that out of the way, let's get into the charts, okay? I'm still hoping and praying that we can scratch off this 2007 distribution type fractal. I'm looking to invalidate this in the first possible instance, but until such time as we find a cycle low and, here's the key part, print a higher high, then we have to leave this on the table as one possible outcome. And if this thing is to break down and then start to head towards the second angle, that for me will have all the familiar symptoms of a completed distribution looking for a bear market thereafter. Now again, it's not a call or a prediction. I'm simply saying we have to be aware of all possible outcomes. This is one of those outcomes, and my preferred look, the thing that I'm leaning on for the most likely and the thing that I think I'm going to be trading out of over the next few sessions, is one final dip to the downside to find that cycle low, probably finishing Monday or Tuesday, followed by a swing, a new high. As soon as we get a new high, I say, okay, perfect, we'll scratch off this 2007 fractal, and the focus will be on getting out somewhere near the top. We have spent enough time in decline here to try to find some cycle lows, but based on all of my experience of trading cycles, I would say that this move is not significant enough just yet. In terms of time, I expect this low to show up anywhere between today and about Monday, Tuesday next week. But this to me does not look like enough of a decline to actually force a cycle low. I would think we're probably going to need one or two more significant red candles before we can actually have enough of a reset, enough of a flush to find a swing and a reversal. As I said a million times, I continue to hunt these cycle lows. You will see me put on positions and get underneath these squeezes as and when I think they're there. I'm on guard in case the market is about to do this, but like I said, based on all of my experience and all the cycles I've seen and traded through, I don't think this is enough of a decline just yet. The same is true of the Nasdaq. I think it probably needs one or two nice big red candles just to kind of flush down here, and then I think we can look for a reversal to come in. And the exact same is true of the Dow. I don't quite think that's enough of a decline to call a cycle low. It's not impossible, but on a balance of probabilities, we probably will likely see a little bit more downside before we can find a swing. I would think the VIX is going to lead this, so maybe one final pop up. The VIX tends to get crushed on a Friday, so since we're finally at VIX Crush Friday, will the meme continue? I suspect it probably will. I think this is enough of a pop up now to form a lower high and then see this thing roll over one more time, and then from down here, like I've been saying over and over again, you'll see me get underneath some VIX longs. So far so good for the stock market, right? The lows are showing up in the expected time frame. Like I said, one or two, maybe three at the most, more downside candles, then we can look for swings and get some additional longs on. Very, very similar deal for gold. Gold, I don't think that's enough of a decline. It certainly could be. Okay, we could have forced it here. That would be a little early, and this doesn't look like enough for me. It looks to me more likely that we've had our first drive, counter trend, looking to undercut that low into a cycle low, and then I think we can go early next week. So keeping a close eye on that. And of course for Bitcoin, you can see my yellow squiggle seems to be coming to fruition. Now, the key thing here was I was expecting two drives, right? Counter trend bounce, maybe an undercut or a double bottom, and then a reversal to force that half cycle low. And I think that's what we're getting. I think we've had the first drive here. We're now seeing the counter trend bounce, maybe one final undercut and go. And that for me would tell me, okay, perfect. We have found a half cycle low that was inverted, and therefore we would be expecting to see that low come in somewhere around Monday or Tuesday of next week. That would make perfect sense. And then, like I said, we would have all the familiar symptoms of having found a true bottom, a true weekly cycle, and be looking for upside from here. And of course, as I showed in yesterday's video, invalidation for this is a significant lower low. Okay, if we do something like this and then plunge, then I would say this is no longer a cycle inversion. We have forced a day 60 cycle low from here. It would be somewhere in the neighborhood of, let's say, Monday or Tuesday next week as well. And then we'll have a full 60-day cycle ahead of us. So there's no way of knowing until after the fact. As always, we have to stay unbiased, unemotional, and let the market prove to me whether or not I'm right or wrong in my expectation. So far, it looks pretty much like I was expecting it to look. So I remain cautiously optimistic here that the people that are calling for a new low to form or a retest of somewhere in this kind of neighborhood, I don't think they're going to get it. Now, I've been wrong many times before. I'll be wrong many times in the future. As ever, I don't care about being right or wrong. I care about staying on the right side of the trade. But as it stands at the moment, based on all my experience of trading cycles, I don't think this area is going to get filled. I don't think that's the case. I think what we're going to do is something more like my yellow squiggle and then upset a bunch of people by screaming higher. So time will tell. As always, open to all possible outcomes. And the big thing is, whilst these cycle lows are being forced in the stock market, gold and Bitcoin over the coming few sessions, say between now and Tuesday, whilst that is occurring, can we see this dollar prove itself to be a fake out. Whilst we find those cycle lows, can we see this thing do something like this and roll over and then start to target those much lower numbers? If we can, that would certainly provide a lot of fuel to see those final extensions come in towards the end of the year. But remember, the longer this remains above the trend line, then the more significant it becomes. Breakout retest resumption here would be me saying we found the 3-year cycle low and we found the bottom in the dollar, and we are looking to see a more deflationary type event unfold in the not too distant future. So for now, my base case is that this is probably going to morph into a fake out based on where the cycles are for everything else. I should note here, a lot of newer investors seem to think that the dollar and the stock market, or the dollar and gold, the dollar and Bitcoin, move in a one-to-one inverse correlation relationship. That is absolutely not the case. There is also a scenario here where the dollar can run higher whilst the stock market, Bitcoin and gold also run higher. And we saw that all through this period here. So this isn't necessarily the kiss of death for the blow off top if this thing is to continue to break out. So wild times once more. Again, if you're not subscribed, please subscribe if you want to make sure that you can watch me do this in real time, find these lows, get some new positions on, get underneath these squeezes. On Saturday, of course, as always, we will come back and do that weekend deep dive where we examine the base case hypothesis, we check for invalidations across the board, we do a bunch of macro stuff and make sure that that is still going the way we expect it to go. For the level 3 members out there, look out for tomorrow's deep dive for you guys. And of course, keep your eye on the notifications because there's a good chance we're going to be putting some positions on in the next few sessions. Other than that, I hope you have a fantastic weekend. I hope you're all doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a bump.